Broadcast is now starting. All attendees are in listen-only mode.
Hello everybody, welcome to join our Trading FKLI and FM70 Trading Strategies webinar. And as usual, before we begin, just want to check if you can hear me. So if you can hear me and see our speaker, the very good looking speaker on the line now, please click raise the hand button. Alright, I'm seeing some hands now. Thank you very much. You may put down your hands. Alright, first of all, I want to thank you for tuning in to our tonight's webinar for Trading FKLI FM70. So tonight, we're going to learn how you can use the right strategies to make profit from the futures in KLCI and the futures is FBM70 contract. And these two are the equity index futures. And today, you're going to learn how to use it to profit. Now, this program is sponsored by Bursa Malaysia as well as CMB Futures and managed by LifeChamp. And the first disclaimer is that whatever our speakers share today do not give you any buy or sell to any contract. So if you decide to do anything, you do it at your own risk. Okay. The organizer, LifeChamp, and the sponsor, Bursa Malaysia and CMB, do not take any responsibility or financial responsibility for all your own financial decisions. So that's a disclaimer for today's webinar. And in fact, we have arranged a whole series of webinars. Today, we're talking about FM70 and this FKLI trading strategy. And we have two more webinars for you for the entire derivative webinar series for 2018. And I hope that you can join for our next two sessions as well. Now, before we begin, let me introduce the speaker today. If you have followed through some of our previous webinars, he has taught some of you before, and he's a full-time trader, a local participant of Bursa Malaysia derivative. Local participant means that every month he has traded at least 1,000 lots of futures contract. So he's somebody with in-depth experience trading the market. He's not only a teacher, he's also a trader himself. So he's a founder of Straits Index Sdn Bhd, a proprietary trading company and associate participant of BMD. He's a trader and writer, and he's a speaker for SIDC, CE, CP program, and also various financial institutions. In fact, he's also a famous columnist for Shane Choo Daily, Money Compass for more than 10 years. So if you buy Shane Choo Daily and Money Compass, you see all of his column, okay, and articles about how to make money from the market. Now, he is none other than CC Yong, and with that, I would like to hand over the session to you, CC.
Thank you, Shane. Good evening, everybody. So let's start today's webinar.
Okay.
Today we're going to...
I'm making you as a presenter now.
We're going to talk about the two equity index futures over here. Yeah, the first one is FKLI, which I think most people will be slightly more familiar with. Second will be FM70. So these two indices actually derive from the stock indices. That means the index is actually comprises of stocks, and they actually derive from the stocks performance. So first you have this KLCI as the stock index, which we quite familiar with over the years. And then the second one is actually FM70, which is something rather new. It was just launched the futures contract for this index. Usually we overlook this index because the only index that can be traded is actually FKLI, which is actually derived from the first one, the FBM KLCI. Okay, so a brief history on how these indices in Malaysia, or Bursa Malaysia rather. So we will have, look at the top left-hand corner, you'll see the large cap, or normally we refer them as blue chips. And then this is actually, we call the main market, which comprises of, some counters. But the large cap or KLCI was, is only actually derived from 30 stocks. And the mid cap, okay, is actually 70 counters, the largest cap after the 30 stocks or blue chips. So to easily knowing this is The FKLCI is actually comprises of 30 stocks of the full market capitalization. Of course, there are some requirement which we no need to discuss about that. FTSE or FTSE is actually handling all this indices calculation. And the next one is actually the mid 70, which we won't discuss as well. Both of these is, one is 30 stocks, blue chips, and the mid cap 70. Together, they form the top 100 company in Malaysia, listed company in Malaysia. This is how this is derived. And overall, this is which from the top 100 from the top, okay. And then on the left-hand side is top 30, which is the largest to the 30th counter, which they actually form FBM KSCI. And on the right-hand side is actually the 31st to 100, which is the 70 stocks from the mid-cap 70 stocks. And both has got their futures contract now. That means you can trade them directly. Okay, in that terms, directly is actually rather miss a bit. You actually don't trade directly. You trade in a different exchange. The same exchange has got a different body, which the BMD is actually the futures contract exchange, which they are not stocks, but the futures index itself was defined to track the cash market or to track the underlying asset or the index. So FKL will track FBM KSCI and FM70 will track FBM mid 70. Now, with this, I briefly show you how these two indices is actually performing. Now you're looking at the FBM KSCI, which is the stock index. All these points is actually calculated from the stock market, the stocks performance and all this. All right, and then from there, you will have another index called FBM70 as well. So look at your probably trading platform or your charting software. You should have these two indices, and from these two indices, there you go. We have FKLI. FKLI is actually from KLCI. All right, they're not necessarily move in tandem 100% all the time. There can be some lacking a few ticks, or even up to 10, 20 ticks, and or they are actually in advance in 10 ticks or so. And another index is rather new. We call it FM70 because it's actually derived from FTSE Mid Cap 70. So this is a new index, and let me briefly discuss about this because I think most people are quite familiar with FKLI, but not really the FM70. FM70 is actually created with this index as underlying asset. Sometimes when you say underlying asset, it should be something that tangible and solid. But in this case, derivatives can derive something from an index, as long as it was actually defined such a way the contract will track this asset or the mid-cap stocks, which equivalent to the cash market or stock market. So because the FM70 tracks the FBM70 for final settlement, because that means every end of the month during the final settlement, it will actually follow the price. So this means that FM70 will have to close a gap, either it's above or below FBM70, that's cash market, before the expiration. That's how the whole thing is defined. And once you understand this, then you will have an idea how you can actually start trading it. It was actually launched on the 27th of August, a new one, but I'm rather excited because it is something that I'll share with you to create something that you can trade in a different dimension. So the first day trading volume is actually quite impressive because there's quite some trading going on. Consider it's a new index. I'll discuss also the benefits that we can have as a traders or investor. This index actually fill the gap of blue chips and the mid cap. Okay, this allow you to start trading futures easily because It's a mini contract which I will going to explain as well, and it's enable investor to invest in the market. That means you don't invest in an individual stock anymore, but rather you can invest in the whole market, which in this case you invest in the mid cap stocks, and then this also enable investor to use this as a index trading fund. If let's say, for example, you would like to invest in Malaysian mid cap stocks as your own personal fund which track the index, because of index usually over number of years, because of inflation, because of a lot of factors, it keep on going up and going up and up. So you with this kind of character and behavior, sometimes we say that the index itself beats a lot of hedge fund. So if you make use of the futures index as an index fund for yourself, for example, it works such a way you can actually not to say outperform the market, but you track the market. That means if market go up 5%, your portfolio should actually gain 5%. If the market actually go down probably 2%, then your portfolio will actually go down 2% as well. So this become an index tracking fund. If you do it individually for yourself, then you are actually doing for your private own fund. So it's quite fun, right? I mean, you can actually do this. And other advantages is like if you're the mid cap investment, because we always has got these people trading blue chip stocks, which it tracks FKLI, so you can hedge using FKLI, or you can invest, or you can create a index tracking funds and so on so forth. But where is a mid cap? So this is actually fill the gaps. Sometimes you may be prefer to invest stocks that not so GLC, stocks that not so blue chips. This could be the one of the stocks that you could be, or area that you could want to fill in the gap. And you invest in a basket of stocks because your exposure is rather not only single stock, but a basket of stock, which is the 70 stocks itself. And this lower the margin requirement. What is margin requirement? Because in order to own these stocks, let's say for example, you don't need to actually fork up all the money to purchase all these 70 stocks. We'll discuss a bit later on. And it's a mini contract. You can have the calendar spreads, which is what I'm trading most, is the calendar spreads. And it creates something new, as I said, excited dimension. You can have some intermarket spreads versus the FKLI finally, which, that's create something new, which I'm going to share with you as well. Let's touch a bit on the invest in the basket of stocks. The FL70 contracts create an exposure of the stocks of the mid 70 cap, right? So it's trading the FL70 is like investing in a basket of stocks. This is actually same as the FKLI, right? But FKLI is a 30 stock. This is the next 70 stocks, okay? But without the hassle to select, analyze, and buy, sell for all the mid cap stocks. That means you don't have to track the 70 stocks individually. You trust that the exchange, the FTSE will have a good hand handling all these indices and all this. So whether you just rely on the index to trading or invest rather than individual stocks, which you got ought to read the annual report. You need to know what's going on in the world, what's going on in this industry, and so on and so forth. So in this case, you don't have to really do that, but you look at one index only. So invest in a basket of stock helps you to lower the risk of drawdown, which when you lose money due to one stock. Okay, you might be holding certain stocks. Okay, and then because the risk is actually spread to all the component stocks lah. So and then you go in also fast because you purchase one index or you buy or sell one contract. It's like you're buying and selling 70 stocks. So your instrument become only one, a single instrument. So talk about the component stocks. In this case, one of the component stock, let's say for the particular few days, because of some various issue, it fell 22.76%. Excuse me. So if you're holding these stocks, that means your portfolio of this particular trade will actually lose 22.76%. But At the same time, the index of these mid-cap stocks is only declined for 1.79%, 1.5%. So that means if you're holding rather than one stock, you're holding a index, so you actually lost 1.5% compared to 22%, which is quite a big difference. You can see the FM70 index is, actually it fell, but then it's not as much as the individual stock itself. So that is the benefit of trading this index, because you see here the FM70 is actually only fell about slightly over 2%. So that is why the trading stocks, but using future index to trade a basket of stocks, it gives you this kind of advantage. But of course, you may say that if it's gain certain stock that went up 20%, then I may only make 2%. True, the opposite is actually quite true. But as a trader, as investor, if you can have, you can have something that lower down the risk, all right. For me, I would rather pick the lower risk investment, because all I want is actually I make money over the long period of time or long term lah. So this is usually you have to look at this angle as well. Now, another factor of trading this is the margin. Trading futures index, you don't have to really like buy up a stock, which you need to either finance or top up with cash to buy up the stock. But in this case, you actually can use a margin to do it. So using a margin means you pay a certain amount of money, but without paying the interest of the difference. Because let's say if an index, for example, the FM70, let's say when it started, it was about 30,000, but you only need to use about 800 ringgit. In this case, you can see on the screen, 800 ringgit margin to hold one contract. But the balance, 28,200, you don't, or 9,800, you don't really have to pay the interest for it. So this makes some leverage advantage to you. So that's why you see 800 per hour, that means you're holding one contract, you only need 800 ringgit. The spread itself is actually even lower in terms of the margin, because the risk is actually lower as well. If you're doing intermarket spread, you only need to pay 40%. That means one FKLI, and then you pay with another FM70, which this is the exciting one. I'll share with you later on. You only need to pay 1,920. That means you trade two contracts that worth margin in terms of margin is 4,000 plus 800, but you only need 1,920 ringgit. So which is actually much lower than you needed to, because it's a mini contract. In this case is 2 ringgit per tick. So if a day range of 200 points, your wealth fluctuation is about 400 ringgit only maximum during the recent statistics. So your risk is actually quite limited. But of course, if you calculate over the margin that you pay, 800 or 400 over 800, then your risk is actually losing 50%. But that is why the risk come in control in our later stage. You have to take this into consideration. Do not assume if it's actually 800 to own a contract, okay? So if you have 8,000, then you own 10 contract. That is totally wrong in terms of risk control. So don't do that, okay? But there is an advantage that you have to take care, because it's a mini contract which you don't have to really worry about how much margin to control one contract. And because it's a smaller contract, suitable for any type of trader. Good, yeah, it's a smaller contract, anybody can start owning one, and if you need more, then you just buy more. So that is the advantage that you can have in this contract. It has got a very big range as well. So look at here, it has got high low of 200 to 12 points for the index for this particular day. So yeah, it does move, And let's slightly talk about the disadvantages of this contract or futures trading in general. Is the leverage. As you see, you pay 4,000, you can own a 8,000, 80,000, 90,000 contract value. If you actually owning a mini FM70, you need only 800 to control about 20 to over 30,000 value of contract. So that is an advantage because you have leverage, but leverage is a double-edged sword. So which it could actually backfire if you don't use it correctly. So that is why the risk of leverage is there. You need to know to not use up all the money. Let's say if you're 4,000, okay, you can't trade one contract because one contract is maximum already. So if you have 8,000 FKL 8,000, the FM70 is actually 800 contract. You can't own or you can't trade 10 contracts because you're actually overaging yourself, to the maximum. So you have to control this. All right. This we call a topic that you can look into is position sizing. After that, lack of futures trading experience is also another disadvantage because many of us started with trading stocks, then eventually we go to futures. Futures, there's some consideration you have to know, like contract value, margin, how the settlement works. It can be mark to market wrong for you. So you thought you make money, the next day you actually not make money. There's gaps, and there's also some settlement, expiration of contracts, all this. And it doesn't go buy sell, it's long short orders. It's not normal for some stocks investors initially. So, and looking at an index instead of the fundamental and financial ratios may be a bit different, for everybody. So that is some area that you have to probably sharpen. But the risk is always one of the most important part. So with that, we talk about strategy. I'll try to share as much as possible, but do ask me question if something that you want more clarification later on. The reason to use computer, for my experience, any strategy that I develop, I don't rely on my eyes to look at certain signals. Let's say, for example, if you look at this pattern and that pattern and certain indicator, the crossover and all this, then you buy and sell, then you always can find some good signals, and you tell yourself every time this signal appears, it makes money. So you may make money 1 or 2 times trying this kind of strategy, but over the long period of time, your trading may not make money. That is one of the main reason why I don't do that. Okay, I call this confirmation bias, because you always try to find what you want to see. So to take this confirmation bias away, you use computerized backtests. All right, this is a minimum thing that you may have to try yourself. If you don't try yourself, never mind. Just do it manually using Excel. Anything actually is possible. I have friends that use Excel to do all the backtesting and also on. Right? So one of the reasons why, because you can't lie to yourself, because the computer result shows you're not making money with this lah. And statistically, okay, representing the system or strategy, it shows you very convincing data. You see, if I shows you some statistics showing you that if you trade this way, you can make money over the next 3 months, it shows you quite positive also. You backtest 30 years, it works, same thing. You'll be quite confident this is the way it works, right? So you need the statistics that showing you how this system or strategy perform, in real life and in backtest. And test and create rules to be executed, because you can create the rules. What kind of timing or situation I need to do certain different things, all right? So with this, I'll share with you one of the software I like to use. Is it called Ninja Trader. I don't know other software. Probably they are better and better new one, but because I tested this quite some time ago, so I'm keep on using this. It's free to download. I think one of the reasons why I started it. And one of the good thing I want to share with you here is that you can use point and click system, so that whenever you're starting to do the so-called computer testing, all right, you may not be fluent in programming, so this allows you to do this. So do search for Ninja Trader and download it, all right. You may enjoy and start to develop something for yourself. So in this case, I'm using a very simple. In fact, I tested this for stocks, for index. It works. Okay, that's how I create. I define the inputs like stochastic K and KD, slow, the buy sell signal, target percent is the TP lah, and trading stop percentage and stop loss percentage. So I define all these numbers in the first screen, and then I select what indicator that I'm going to use, because in this case I'm using stochastic for short-term trading. All right, so I choose stochastic, and I pick some parameters and so on, and later on I define a trading signal. That means I enter in a buy with stochastic crossover certain level, which I don't have to specify because I want to tell me what is the level. So in this case, if the stochastic K actually cross above in a certain level, is trigger a buy signal. So this is actually when I'm looking at, like, index fund kind of area, so that I'm using this to define a buy signal and so on. So, and then I define the stop loss, because any trading actually associated with some risk lah. So that's why there's a stop loss and profit target, so on and so forth. So after you define this, it's done, So it's actually not so many steps. You may need to probably learn up, how to call up the function. But now you have YouTube, you have a lot of community forums at which you can learn this quite easily. And you can also actually program and edit the actual codes, which the point and clicks actually created some codes for you. If you feel like you can actually edit the code by yourself. So, but in this case, I didn't touch any on the coding, just pure using point and click. After that, I run some back tests, and it shows me some good result. In this case, you can see that I only want to enter into one side, which is a long side signal in this case, because this is actually applicable to stock trading as well. So with this, it gives quite a good time of returns, okay, in the back test. All right, and the software will able to show when is the actual entry point. So with this, actually you will learn actually how your system works. So you can browse through, all 5 years, 10 years, all the counters, indices that you put in. It will actually back then show you a basket of stocks or basket of indices. So these are all the results, and believe me, it actually looks quite impressive. But trading the stocks, trading indices using computer backtest where is some way that take your emotion away. But to follow it is actually not that straightforward and easy. So I'll show another detailed backtest of this system. All right, using FKLI. Okay, over here you can see that the parameter that I'm using, the result is positive. You don't have to be too so-called excited about how many percent it makes. Not yet. All right, you need to slightly more from there, but probably I'll share with you this section here. The buy signal is actually triggered on fire if the stochastic break above 10, okay, and sell when it's break below 26. It's quite odd, right? If you use your eyes, browse through chart one by one, you will never come up with this kind of parameters. Only the backtest will give you these kind of parameters. This is why, just like you're driving a car nowadays, you're using this your app to navigate, right? If you sometimes it suggests you certain routes that you will never discover before by yourself. But this software, based on no emotion, and they just calculate the fastest way without jam for you. It gets you there, with some surprise route, right? Same thing. So stochastic, it break 10 by break below 26 sell. Again, can you trade with this kind of signal? Which let me discuss later, and you can always refer and ask me. You have to be knowing what you do, then only you can do. So on where the risk management comes in and all this. But this is just a system which only 30% of the successful trades is actually comes from the entry signal. And the stochastic parameter that I'm using, the K is actually 14. The D, KD is 3 in terms of the D line. The D line is 3 days. And the slow factor is actually 3 days also. My stop loss here is actually 10%, 0.1 is 10%. Target profit on 20%, very optimistic, right? This is actually a trend following system. And a trailing percent stop is actually 5%. That means if you make money, but the profit actually declined 5%, you exit from the position. So this is actually on a daily chart basis, and this is how it goes, right? Now we move on to the next one. We can actually discuss if you have question asked. Over different parameters and period of time is actually give you not a very perfect, but from what you can see here, the profitable percentage is actually something average about 60-65%, which is actually good enough to make money, because you cut loss at 10%, your profit is actually 20%. So this is how you define a system. But you can also look at the actual trading entries, okay? But this is trend following, so you have to keep for a number of days as well, okay? So without any emotion and this thing give you a result and create a system for you, which if you ask me, if I do it manually with my own eyes and look at it, I will never create a system, the parameters like this, So the next one is also true. This is another angle of different period of time. That's how this fire buy and sells. You can see that it's actually works, but on execution, it needs some guts, because your first entry may be losing money initially for the first 1 day or 2 days, and then only the market come back to you. So you have to really work and trust the system. So this is the first system that or ways of develop a system that I share with you. Stochastic is an indicator I use most. Then I'll share with you another way of building a system. In this case, we are using FM70 as the instrument. So surprisingly, FM70 actually gives some trend following signals quite well according to the backtest. And please bear in mind why the chart looks this way. It's actually climb up slowly in terms of profit because it's a futures contract. If you're investing in stocks, stocks always give you you have to trade in one direction. You have to buy stock, then you sell, you make money. But futures, it giving you a different dimension where you can long and short. So during the bad time, you can actually short the contract to make money. So on the short side to make money. So this is how it make it quite interesting, because I remember friends told me many years ago why we trade futures. The reason is because according to this friend of mine, is futures trading is actually recession proof. Means there won't be a period of time where the index cannot be traded. It can be go up, yeah, you long. It can be when coming down, you just do a short, then you're still in the trading ecology. You're still able to trade, because of ups and downs in the market. So that is one of the reasons, usually futures traders are quite active, because we allow to short selling for whatever instrument that we are trading with. So in this example that I share with you, it gives some positive result as well. So where there are some losses, but as long as the losses actually cover the gain, you know, I mean the gain actually cover the losses, then it will be fine, right? And with this result, actually, for me, we're able to trade. But of course, later I'll show you another way of trading is actually by doing a spread, and it shows you some trend. Okay, this strategy that I'm sharing with you with the FM70 is also a trend following, because most of the time, unless you are day trading and scalping, you probably don't need this system. If you're trading scalping means a lot of my friends who trading outright, they are trading scalping means they buy and sell index, they take profit in 1 tick, 2 ticks, 3 ticks, then and so on and so forth. So not taking a big like 10, 20 points, 30 points, 100 points, those become trend following or swing trading. It's different way of trading. You may do that. Most of the people start with that. But full-time traders, for outright trading, a lot of them are actually scalpers, day trading and so on. So in this case, this system is actually uses moving averages, EMA, in fact, crossover to do a system. But EMA has got a very bad reputation to create a system that it shows so good, but then it's hard to trading. The reason is because you need to study these. So this system, I have a lot of codings inside, so you can see a lot of words and all this. It shows you when to go in and all this, and give you some indication. But I will usually rely on this system to detect any seasonal patterns or some score, C score, a lot of terms that you can get. I'm not an expert in algo, but yeah, that is how I detect the patterns of trading using this kind of system, especially for indices or commodities and so on. So in this case, you can see that it also gives you some way how it trades. Okay, let me share with you the parameters that I'm using here. Is let me have the pointer. Okay, is to use EMA. Okay, the EMA is actually 5-day EMA, crossing over 15-day EMA. Honestly, I'm not so particular about the 5 and 15. You don't have to really like jot it down. You have to test it yourself. I can use 10, 20-day actually. My test is always, I can make it give a very similar result. I'm not so particular on pinpointing how many days. Okay. And maximum loss is actually 1%. Important. 1% is important. If you have been going through all the seminars, I've been telling you 1% risk of cut loss is actually quite important and easy to follow, basically. And then your profit target is actually on 14%. As I said again, it doesn't matter. It can be 15%. It can be higher and lower. And there's other different thing is actually re-entry. It doesn't allow you to keep on filing a buy sell signal on the same day or certain period of time. Trailing stop is on the 2%, and then profit stop is actually 10% as well. So stop is 3%, okay, and so on. So this is actually quite a complex kind of percent and all this lah. But all in all, it actually tells you this ninja trader is able for you to backtest a system for yourself to use, and hopefully from there it creates a system for you. But that's only first step. Don't simply, as I said, trade without knowing the risk of using a system, knowing the risk of how to control your margin and all this. So that's why it's important for you to understand what I'm going to share here is the dilemma of trading is, sometimes when you do back test, it shows very positive result. But then when you actually trading it, it may actually give quite the opposite result for you, or you may actually make some system, some methods shared by friends and all this that shows very good result. When you are not buying or not trading, it gives you perfect signals. But when you actually in a position, it may actually not give you the result that you wanted. So this is a dilemma of trading. So sometimes you take this into account so that you not overly rely on all this, system that you may actually might not be making money. So trading system or strategy can look very good in backtests but fail in live trading. So this is actually quite common. One of the factors is probably the executor not doing it well, or sometimes one can be winning just because of luck, and also without fear as a beginner. People who just started program, they may feel like I find the holy grail of trading. As long as I follow this system, so the market should give me the return that, in the backtest. Actually, the market don't care. The market will never listen to what you say or what you wish. The market moves as what the market wanted to. It may go up and down, it may not just follow your system. After 10 years, you realize your system not work, and you can't blame the market because the market won't give you a response, on it just behave on the whole way that the market wanted to. So that's why a long-term trading business, you cannot rely on just pure luck, And when you're actually using indicator to develop your system, you have to understand a few factors, which I cannot be highlight enough about this. Is first thing is a collinear effect, which a lot of traders maybe develop system that require too many indicators. You can see that just now I either use one indicator or one indicator with one or two parameters, all right, which is actually considered a lot already. So all the signals will give you similar result. If you use more, it's actually you have a much higher percent to fail in terms of all these factors add in. So you don't have to rely on so many indicators. You see, if you have a system or you have a method of trading that require you to, let's say, to answer 10, 20 steps before you do a buy and sell calls, if you ask me, you're not trading. You're just purely academic. Let's say, for example, you need an A condition to meet before you go to B. Condition is meet, then you C, then you D, then from D, then you choose whether you'll be E, F, G. Then you choose one of G, then you go to H, I, J, so on and so forth. Then you may have 10 layers, 5 layers of questionnaire to be answered and choose before you make a trading decision. That's not the way to trade. The reason is it doesn't work this way actually trading. I don't know how to explain, but you can test. If you have so many constraints before you make a call, it will be too difficult for you to make decision on the fly. And once you see this, you may end up actually not making the signal, or when you're scared, you miss the boat, you will actually hit the market at the wrong time, wrong price. For me, I'll define my rules. I'll define my setup. When should I go in? When should I exit? Before I start trading. So when I start trading, if the price go this way, I'll do this. If price come down, I have defined my own ways of trading. Last time I used to write down everything, to tell myself what to do. But nowadays I'll be more like automatic, because I've been doing this for years. You don't need that reminder anymore. So that's first thing. Don't use too many indicators. And confirmation bias, we just spoke. Don't rely on your eyes, your brain to decide what you want to do. Based on statistics, based on what you have do it, without prejudge the system. Collecting data, look at the charts, on your own ways is actually much more important. The next thing is over-optimize. Okay, over-optimize is one of the reasons a lot of system fails, because we tend to, let's say, if 5, just like I said, 5 EMA, 15 EMA, then you try to improve, like, can I use 6 and then 18? Then you say, can I use 6 and then probably I improve by 17? Can I get a better signal? You may get a better signal, but this is actually over-optimizing. You get perfect signal, 99% you make money, but I can tell you, if you have a 99% chance of making money systems put into play, you have a 99% chance of losing money, because the market won't act 99% as what happened before, right? So don't over-optimize, because it will lead to the next dilemma or traps is curve fitting. You try to assume the market will behave and work as what it happens before in almost like 100% or 99%. So which it will not happen. So that is why all these are actually, you need to avoid all this at least before you really like go into the trading and consistently can make a living out of it. So, but all in all, that you have to take care is risk management in trading. So risk management is actually very important. I would say it's the center of all successful trading stories. So control your risks is the most important thing in your trade, and trade with the money that you afford to lose is actually essentially, it's a starting thing. So that's why if you're like me, you need to save up, in your young age before you have the capital to really start trading. Or you build your skill so that you have the skill to make money, be it 1% a month, 2% a month. So then only that you can actually work for a firm that probably can give you quite big capital to start trading and make money. So these are the things that you have to consider with. But before I end, I have last topic, which is I like it most, is actually trading spreads. Spread trading is actually something that I call it, because risk is the major enemy in trading. So spread trading actually reduces risk, right? In trading, it also reduces the trading pace, the speed, and it has got much lower margin. Remember just now FM70, one contract is 800, but the spread is actually 200, and the back-month spread is only 100 ringgit. It's actually quite a big difference in terms of money. And the return per dollar risk, because of low margin, is actually quite higher. That means the money they put in, the return is actually higher in compared to RX. And it takes gaps away from trading, because spread trading, it doesn't have gaps in nature, because it's hard to have gaps actually. So if you're someone like me, when you're trading futures index, the market, you're holding a long contract overnight, chance the market will get down tomorrow. You're holding a long contract, chance the market will do the opposite the next morning. But spread trading has got lesser gap. As far as I'm concerned, the active month don't have gap actually. So it works in the sideways markets as well. And if you know spread well, you can actually protect a losing position. If you, let's say, you buy FKLI, you can sell FM70 to protect it. And trading with strategies. So once you are in spread, you're also in strategy. Just now we develop strategy, but spread itself is a strategy in terms of trading. So spread trading is an instrument as well in FM70, FKLI. In Malaysia, we are actually quite famous in terms of doing spread. Most of the traders are trading spreads as well, because we can actually make, trade the spread like an instrument. So you just buy and sell the spread itself, and you are actually leverage on the retail friendly margin, because 100 per spread. So I think quite a lot of people that are able to trade FM70 spread, if the spread is itself only 100 to start, compared to buy a stock 100, I don't know you can buy a stock, because the exchange fees, the brokerage fees will actually add up quite a lot, like minimum already. So in futures, no, the brokerage is the same. Doesn't matter how much you, how many lots you trade or what's the contract size. So it reduces risk and it's allow you to survive in a turbulent market. Recently you can see the market quite tumble, up and down and all this. So the spread market actually allow you to have much higher chance to survive initially, because a lot of traders actually fail in probably initial few years, because of they can't withstand the turbulent market. So first step to be the world of full-time trading, as I said, a lot of full-time traders trading it, and you can trade in sideways as well as very very violent market in spread. Okay, it takes the underlying accept directional trading spread, because you buy one contract and you sell one contract in a different month. So you actually effectively take the direction away from your trading, so which is good lah, right? And spread trading in FKLI, you have FKL spread codes. If you interested, go home. Tomorrow morning, you try pull out your spread codes from your FKLI. You can see a new thing. Nowadays you can see October, November. Do you know that there is a October, November spread codes? So call it out and see how it works, and you may start trading it. For me, I start trading FKL spread, and then I trade also CPO spread, and now most of my trades are trading these two contracts. And recently I also started trading FKI and FM70 intermarket spread as well. So this is the spread market. But of course, we have a different webinar before, which you can dig out, and you can. I actually discuss even more in terms of the spread. This is another spread of FKI, which during rollover the volume is actually quite high, because spread allows the hedgers or those who actually have big position in the FKI market to roll the contract to the next month. So that's FKI spread. Now the FM70 also has its own spread. So one of the star trading instrument in Malaysia is actually spread trading, particularly in FCPO, is quite famous, and FKLI, as well as the new FM70. Now all these has spread, and spread trading has this nature of low risk and higher survival rate. So it looks so actually not so catchy when I say low risk, high survival rate. It actually translates to if the market is quiet, and translate to the return is also low. But believe me, the return can be very high in terms of how much money you put in the equity and all these things. So once you're in this industry, you know that you need to control the risk in order to survive and make money in the long term. Being a windfall durian runto is actually doesn't really impress myself, because what I want is actually in the long run I can still make money and make it as a business, as a job, kind of thing, and this has been adopted by a lot of actually professional traders around the world, not only in Malaysia. So everywhere actually a lot of traders are trading spread, and this calendar spread is something that very popular in CPU, as I just mentioned, and FKLI. So this itself is a tool, is a strategy. You can do it for hedging and doing rollover and trading. So rollover is actually for, let's say if you have October position, you want to roll to November, then you buy or sell spread. You actually do a rollover, and this is a good starting ground for trader to trade spread, because FM70 and FKI is actually a good start for you, because in terms of cost also quite reasonable. FKI you talk about 400, 450. This FM70 you talk about 100, 200. But CPU spread nowadays stood at 1,200. So it's quite different level in terms of the cost of starting trading it. Now, the most exciting thing is the new thing that I just tested is intermarket spread. You can have, FKI and F70 both in the top 100 stocks in Bursa, Malaysia. So you can pair this FKI with FM70. Now, once you do a spread, please remember, when you enter in the long position, you always enter into a short position on the other contract. That means if you long FKLI, you cannot long FM70. You have to do the opposite. Then it will only qualify as a spread. And this I call it a whole new spread trading strategy to enable trader to start exploring. I have these trades just to illustrate that it works this way. So one fine day I did a long FM70 and then I shorted FKLI. Yeah, luckily the FKLI actually fell down. So you can see that you actually make money and lose money at the same time. Wait, let me show it to you. Okay. So I actually I have a long and a short FKLI. So I close the long at loss. FM70 I lose about 400 ringgit, but I gain back in the short FKLI. So if you're a spread trader, you'll be familiar with this, because you always have one leg losing money. So that's why a lot of people ask me how you're doing. So I said, every day I lose money. The reason is because I'm trading spreads. I always have a leg that, lose money, usually, okay? So that's why, but as long as the total of these two numbers, you get a gain in terms of money to make, then you're actually happy yourself, because this is how spread trading works. One leg lose money, one leg make money. Of course, you can ask me why you allow one leg to lose money if you know the market coming down. My answer is always, I do know the market come down. If I know the market will come down the next day, I know what to do. But the problem is actually almost no one can precisely predict every day in the market going up, that's too spread. So the next one is, if you really do a lot of spreads of the intermarket, you can do this in the perfect ratios. According to my friend Yong Chen, he is actually tested with his formula. He's very good in this kind of testing and algo things. Yeah, he did a test showing that if you want to do a perfect hedge, you can trade 3 FKLI and 7 FM70 contracts. But bear in mind, out of these contracts, 3 contracts FKI matched with 3 contracts of FM70 will be calculated using our intermarket spread margin, which is 1,920 ringgit, and the rest, the 4 contracts of FM70, you'll be charged 4 times 800, 3,200 plus that about 2,000. So you need about 5,000 to hold this, 3 FKI and 7 FM70 contract, and then this gives you very, very linear correlation with these 2 instruments. So, and then if you want to know more about spread, we have the previous webinar recorded, so you can find out from my website. Okay, so beside this trading outright that we discussed in the strategy, the backtest and all this, so spread trading is one of the form or method to trade, and it has a very large volume in trading the market. A lot in the market actually comes from spread. So, but less people are knowing it, so that's why it's actually less popular. But we have been doing this awareness for the past probably 4-5 years. There are some recorded videos that we have done, so that's why we don't want to keep on repeating it. That you can find in our website and request for it. So with this, probably I'll end today's webinar. I'll pass back the presentation to our host, LifeChamp, Mr. Shane, and probably we will throw in some questions that I can try to answer from now.
All right, thank you so much, CC. And well, so if you want to learn about spread trading, please go to www.straitsindex.com. Okay, so you will watch the webinar and know more about spread trading, which is the best kept secret of futures. Now, we have a number of questions on our screen now. So if you have more questions, you can type it on the screen. We will address them. Please write your sentence in full so we understand what you're asking. So now the first question is FKLI and FM70 Sharia compliant?
FKLI, according to some of my friends, they may not classify as Sharia compliance. As well as the FM70, I don't have the details whether this is compliant to the Sharia. So many of my friends who trading for the Sharia compliance, they will go for FCPO. But this is really up to your taste and preference. I'm not sure I'm the right person to answer this, but I'm sure Bursa has got quite good information on this from the website.
Okay, so the next question is, what is mark to market?
All right, mark to market is a term used by futures traders, which, let's say, for example, you may be, especially when you're trading spreads, when you hold a contract, the contract maybe has a different, let's say you buy FKLI, spot month is 1,700, for example, and then you sell November, the next month is 1,700 also. So your difference is actually you buy one, you sell one, so you long zero. So your difference or your spread that you bought is actually zero. But towards closing, the spread is still doing zero, but the October month may be doing let's say 1,702, and then November contract may be still doing 1,700 only because no one is actually actively trading it. So you actually buy zero, but you look at your profit, you have actually 2 ticks profit in your pocket. So which the mark to market is actually to 2, but while the market actively trading is only 0 because of closing. The last trade someone actually bought the October contract at 2 ticks higher, so you get a mark to market in your favor. The mark to market also, it can be in not in your favor because it can actually go opposite. Someone maybe buy November 2 ticks higher, then you actually mark to market losing 2 ticks. This is actually towards the last moment of the trading, which is the closing mark to market. And then usually after 7, Bursa will have the settlement mark to market, settlement price basically, and your mark to market can be also wrong again. It can be from your making 2 ticks to losing 2 ticks, based on the settlement price. But bear in mind, the mark to market do not actually affect your it could affect your margin call and all this if your holding position quite big and lose quite a lot. But usually after the market starts, the mark to market will actually correct itself. Then you have no problem in terms of the market may back to 0 by the next trading days. But during the trading hours, the mark to market can be 1 ticks higher, 2 ticks lower than your position. So you may be suddenly you make money, suddenly you lose money. That is because the outright position, the October and the November, is actually doing not in tandem. It means people don't trade together. But the spread, always people trade at 0, 0, and then 1, 1, then -1. So your spread position may be actually mark to market. I'll say sometimes we say mark to market wrong or in favor or against you. But please don't be alarmed. But you have to learn how to read this mark to market.
Okay, so thank you so much for the excellent answer. So we have the next question. What is the difference between spot month, front month, and back month spread?
Okay, in equity index, usually most of traders will trade the spot month. So if you're trading commodities, then you may not trading the spot month. The reason is commodities has got a physical back contract. Let's say CPO. Usually we trade the 3rd month because we don't want to take the oil. But commodity like gold is actually trading the spot month. The reason is because the gold contract is actually cash settled. That means you don't take delivery. There's no stocks, no gold bar involved. Equity index usually are cash settled because equity index derived from stocks, and stock has got various of small stocks in terms of you buy one contract, you enter for so many fracture stocks. So they will also define cash settled. So once it's called cash settled, most of the traders will trade spot month. Now, when you're trading spot month, all right, The reason we trade spot month because we want the closest relationship of the futures contract to the cash market or to the underlying asset. So once you catch the cash market, the closest one is actually the spot month, the one that's going to expire very soon. So that's we call the spot month. Okay, so the next month is actually after that we call the back month or the further month. So when we talk about equity index, when we talk about spot month spread, that means the spread of the current month, this month, like for example, FM70 or FKLI is October, November. The spot month spread, October, November. The back month spread will be November and December, which in this case, we have the December, so that's why you can see the spot month spread actually works here. Sometimes for equity index, we may not have the back month spread. The back month spread can be November and January, you know. So in this case, it's still back month spread, okay? Even though it's actually a double month, or even though it's a 2 month, so it's still considered a back month spread. So if spot month spread is 200, so that means you're trading October, November is 200. You pay 200 for margin. If you're trading November and December, you only pay 100 for the margin. That's how you define the spot month and back month spread.
All right. So the next question is, what is Sharpe ratio in backtest?
The Sharpe ratio is something you know, it shows how accurate or workable this strategy is. Actually, it's pretty hard to get a very high Sharpe ratio because this ratio shows how viable this strategy is. You know, I don't have a very good Sharpe because it has got some losses and all this lah. So that is why I recommend you to go over to download this Ninja Trader. It has got a built-in help file to explain all these parameters, and this is how a lot of system backtester they are using this kind of terminology to get themselves to understand the system, because all these are defined by a lot of mathematicians and so on. So it shows you how many wins and lose in terms of this system. So do go and download Ninja Trader. It's quite a small one. They have some live data feed also for you to test, but mainly are US market. So you need to either key in manually or you download from local charting software in order to get the data, so to put into your Ninja Trader.
Okay, so how do you do forward tests? Is it with historical data or live data?
Okay, forward testing is very important. So that's why you need to do it. Okay, there's few ways to do it for testing. So let's say if you have only 3 months data, so you can't do a forward test because your back test probably consume the 3 months already. So what you do is you do a 3 months back test and then use this 3 months to start trading a 3 months forward test in simulated simulation. That means you really spend 3 months to collect the actual data and see how this system works in life. Don't put in money in yet. So that is actually what we call paper trading. Is also a form of forward test. But the actual forward test that you can try if you have enough data. Let's say you may have a daily data for 10 years, okay, or you have an intraday data for 1 year. Doesn't matter lah. Then you need some substantial data. Let's say you have 10 years data. Don't use all the data to don't use all the data to backtest. Okay, use probably half only, right? So this is how you do it, right? Use half only the data, or probably 60% of data to do backtest. After you backtest, okay, then use a balance of 30% or 40% or even 50% to run the backtest into a forward scenario. That means you assume you have 10 years, but you use only, you assume you have 10 years data, but you assume you only have 5 years. So use the 5 years for backtest, and then use the second part of the 5 years to forward test. So if the system passes this, then you get a very good system. You get a very, very reliable system, because without knowing that, you know, that for the second part of the 5 years, but you can actually achieve some fantastic result there you go. There you get it already. So yeah, this is how you're able to do some fruitful back testing. But first few testing, if you get a very good system, doubt yourself. All right. But this is how you start. So a very good question there. And I'm glad you asked as well. And this is how you do it.
Okay, so thanks for the answer. So now, how do you use fundamental news in the trading? As appears that you are more a chartist. So that's the question.
Okay. I use fundamental. Actually, a lot of tradings. The actual trading itself is actually fundamental. That means anything happens in the prices are affected by fundamental. How I trade fundamentals or news? Yeah, I do collect news data and all this. What I do is actually usually there's a lot of survey, the market or GDP 100%. The expert are all, so you record it down, all right, and the export and all this, you record it down. Once the data miss these kind of figures when they announce, the market moves. So this is usually how I look at it. But sometimes I may be anticipate the market may move up and down, so I do that direction that I wanted to. Suddenly the result comes in, the data miss against my position, then I will need to call a cut, and then I do myself either exit the market or I do the opposite market. So or direction. So that's how I trade it. In terms of whether I'm a chartist, I think over these few years I may be hard to really like classify myself whether I'm a chartist or not. I use chart quite a lot. I know the resistance, but just I don't use a chart as in holy grail. I use it as a reference. The chart probably helped you 10-20% in your actual trading. If you rely on the chart solely, then that's probably one of the reasons why you're not trading full time yet. Because for me, I look at price, I look at differences, I look at why one of the price is higher than the other one. I look at this kind of angle rather than the price cross over one of the EMA. That's why I need to do a long. I do that as a reference, but at the same time, I look at if this long is actually favorable because this index is actually lower than the other one. So should I do this one or should I do that one next one, or I do the combination of spread? More on actually doing this kind of thing. So, but once you're doing spread, you're doing charting, it's actually everything you do is actually related to the fundamental. I'm more on. I should call myself just trading. So I don't mind look at figures, look at numbers, look at the news and the chart. So more like because I'm trading manually. So I need all this information to judge, what kind of strategy that to deploy, whether I do a long or short in terms of the spread.
Okay. So the next question is, what is the intermarket spread charges for these two, FKLI and FM70?
Yeah. Look at the slide. Actually, is 1,920 ringgit to trading both FKI and one FM70, but must be opposite direction. So you just long one FKI, you short one FM70, your broker will charge you 1,920.
Okay. So how do the FKLI calendar spread differ from intermarket spread?
Okay. FKI calendar spread actually is actually trading in terms of actually FKI spread is actually trading the fundamental FKI. So you take into account of the dividends pair and all this, and even the season when is the window dressing and so on. While the intermarket spread is actually trading on whether the blue chips outperform the mid cap or the mid cap outperform blue chips, or you just for the pure sake of what we call let's say you're trading some strategy, you long FKI or you short FM70, then suddenly your position is actually not in good shape. The market go against you, and you do not want to cut loss because this could be wrong or temporary. So let's say if you long FKLI, then you short FM70, or vice versa, you may be long FM70. Then suddenly the market topper, the US, come up not good. Then you short FKLIs to protect your position. So this become hedging. So these are trading different methods in terms of intermarket spread and the FKI spread itself. But of course, FKI spread actually used a lot for rollover, so you can trade as a rollover instrument for you as well.
Okay, so what is the greatest benefit of using spread trading?
Greatest benefit of using spread trading, probably spread trading is instrument, as I said, lower risk in terms of the nature of the spread itself. The benefit will be you lower the risk, but you have a high chance to survive. And you know that sometimes when I'm trading spreads, I may not have a cut-loss strategy. So I may be trading with this strategy, but when I'm losing money, I manage the position to get myself out of any losing position. So yeah, the greatest benefit may be on the it has got quite a high winning chance.
So high winning chance is the greatest benefit. Okay, so if I go into intermarket spread between FKLI and FM70, will I encounter gaps on the next trading session?
It may have a gap in terms of the first price done, because these two contracts are a different market. All right, FM70 has got less people trade compared to FKLI, so you may have a gap, but you have to hold this gap, because once you have an open gap, the other market will actually catch up, unless something is very wrong with the underlying asset. It could catch up, but it could create a gap because of lesser liquidity in initial trading. So you may have a mark-to-market favor or against you. Happens frequently if you're doing FM70 and FKI intermarket spread. You may encounter this compared to candle spread. Candle spread, the active candle spread, so far I have hardly seen any gap happens.
Okay, so if I have two contract now, can I do one long contract and one short contract simultaneously?
You have two contracts. Do you mean all are FKI? If all are FKI, you long one FKI, you short one FKI at the same month, then virtually you actually close your position. So I'm not sure how.
Okay, yeah.
How
the question is not specific, but I'm guessing that if you long one FKLI, you short one FKLI, that means you're closing your position. So that means you go for FM70 or you long one FCPO, short one FCPO, you're actually closing your positions. So if you are doing long one FKLI and short one FM70, that works, right?
Yeah. Or you long October, you sell November, and then it turns to a candle spread. So it still works, but that means same contract or same contract month, you can't do a long and short at the same time. You will actually close the position.
Yeah.
Although sometimes I do that.
Accidentally.
I do that, I still consider. No, I do that, but I assume I still have two positions. One long, one short. In my records, I have two positions, but in my book, in the statements, there's no more contract.
Okay. Now the next question is it correct to say that if I tembak, okay, it's the word tembak, FKLI or FM70 by buying or selling, wait and hold until the net profit target is met? For instance, my profit target is like 50 ringgit, then I get out of my position. Is that how it works? Now the question is just like how you simulate how both shorting and longing and shorting the other one work.
Yeah, you long one, you short one, then you once you meet the profit, then you take out, right? So and once you're losing money, then you just hold the position. This is how spread works generally. It works this way, provided they are not expire. But if towards expire, you can roll both contract. You can roll FKI, you can roll your FM70, and make sure also that When you close one position, the other one is actually open. So you will take profit at one side, the other one may be losing and keep on losing money. So since FM70 has got less liquidity now, you may actually close FM70, then you actually close FKI later. It works this way, but just have to probably you have to do slightly more trades in order to get a feel how to do this. Yeah, but of course there are some software allowing you to do all this kind of trading as well. But in this case, manual trading, yes, you can actually do this.
Okay, so how do you open or close FM70 or FKLI spread at your desired price while FM70 bid and ask spread is large?
Okay, it doesn't matter. The exchange actually has got a software of matching orders for you. So, but let's say, for example, regardless of FM70 whether liquidate or not, right? You can buy a spread. Let's say you buy at probably 10, you sell at 20. So you buy 10 already, then when the price hit 20, it will actually close regardless of whether there's liquidity there. Because if you look at FM70 or FKLI RI prices, you notice there's a price. If you're using software like JTraders, that has got an X-ray. This X-ray is actually the price implied from spread. So if you look at FCPO, you will see a lot of X-ray everywhere. This kind of volume are the spread volumes. So once someone hit the price, so your spread will actually close. Without, you see, there's no one trade in the candle spread, but my position get closed because the outright will close your position. Yes, it's actually possible. It can be done this way, and it happens all the time actually.
So does a broker automatically charge you a lower margin when you buy a pair of spread?
Not necessarily. If the broker is actually unaware, or maybe the trading platform they are using is actually cannot handle the spread separately, you may actually still charge the full outright margin, giving a trading spread. If you encounter this, it's very easy. You just click the buy or sell spread, then you look at the margin required, then you know that whether your broker has configured a spread for you. But the rule of thumb is actually contact your broker. They're more than happy to service you and advise you through, maybe you just notify, oh, I can set you the RI margin, or I can set both type margin, spread margin and the RI margin. As far as I know, the newer system has got ability to differentiate both. The exchange side, at night, settlement after market close, exchange has got a very good system to help you to do all this. You may be just buy one contract, sell, buy, sell. You may not realize the spread built by you yourself, but the exchange will recognize this, and actually they only charge you the spread margin. But during trading, the broker has got their own ways of handling risks and orders. Then you may actually not able to get the spread margin, even you're trading a spread. So if you're gonna test, just do a test order, not confirm to buy put the order, but yeah, you put a test, look at the margin, or just contact your broker. I'm sure they're more than happy. You probably contact them, and they're more than happy to service you.
Okay, so for FKLI, why is it sometimes the spot market closing could be quite different from the cash market?
If the market, because KLCI is a cash market which closed at 5 p.m. sharp, FKLI actually closed 15 minutes later, and then even on the sharp 4:45, 4:50, both prices can be different. The FKLI can be 10 points higher than the cash market, which doesn't make sense, right? It just says that the demand of the F futures are quite high compared to the cash market, but cash refused to move up. It can be also someone is heavily shorting a contract, which they want FKLI to go up to protect the position. They can be shorting Simsky, they can be shorting Hang Seng, They need to buy FKLI to protect the position. So that's why you see it doesn't make sense, because of the price shouldn't behave that way, right? Yeah, because it's more on during before the market expire, the spot market expire, the FKLI can move their own way. Depends on the supply and demand of the contracts. It's the buyers actually are more gung ho, aggressive in buying contracts for their own purpose, hedging, whatever. They will actually push up the price, can be 5-10 points higher. Or another one is actually because of the what we call sometimes because of dividend, because of dividend of the next month, this month. So that could actually create a gaps in terms of the contract as well. So there are many reasons, but try not to interpret thoroughly. If FKI higher than this, then it could be means the FKI can go up, the stock can go up, not necessarily. So if you create statistics, it may not be so accurate, and sometimes also because of after 5, there's another 15%, 15 minutes for traders to close the position. A lot of short position may want to close a long position. So what they do is actually they keep on buying, but there's no one selling, so they have to buy quite high in order to close the price, because this could be intraday traders or they want to close a book, so they actually need to buy rather than they actually care about the cash market price at all, or they anticipate the US or the European side may be closing higher, so they need to cut their short position, or they want to prepare their next day position doing a long, because they're shorted somewhere else. As I said, a lot of traders are trading spreads, so that could be explained why. But I don't have a fixed answer, as I don't recommend you to find a fixed answer for it. So it's fine for it to go up 5-10 points higher. So if this against you, let's say for example you shorted, then the FKI went up higher, but you see the cash is actually low, then you say, oh, never mind, but you can actually hedge. You can sell, let's say you can buy FM70, or you can actually buy the next month FKI to protect your position. This is why spread is actually important, and sometimes because let's say for example you run a margin because of FKI, you're holding a wrong position, then it may affect you doing closing or settlement. You can actually do a opposite contract on the FKI to form a calendar spread, or do a FM70 to do an intermarket spreads. That could actually lower down your margin requirement to do the settlement at night. So think out the box. That will actually gives you quite a new dimension of trading, even you're trading a local market. Honestly, I'm trading fully trading a local market, and I find because of spread and all this intermarket spread, you can have a lot of dimension, even just pure trading local market.
Okay, yeah, CC, you need to answer a bit faster, or maybe keep your answer brief, because we have a number of questions left, but there are still a number of questions here.
All right.
So is spread price follow futures fair value?
Futures fair value, I think so, yes. The spread price is actually 2 futures fair value for different contract month, yes.
Okay, so how is OKLI trading compared to FKLI?
OKLI is another dimension if you trade FKLI. So if you're trading FKLI and somehow you find yourself in a back foot, you need protection, you need the hedging, or to build a portfolio using OKLI, it's actually tradable. And if you find that there's no code there, you can always request your broker to contact the market maker to give you codes which to protect your stocks, to protect your FKI position. Yes, this is a very good example of trading FKI with the OKI as a hedging tool. Or you want to build opposite, you build the OKI and then use the FKI as a hedging tool, also can, But bear in mind, selling put, selling call actually require a limited risk of margin. So you have to take this into account. So you may actually need more money than you think you need.
Okay, so when is the best month to execute spread trading for immediate monthly cash flow?
Usually the rollover is the last week of each calendar month. If you need a quick buy and sell to exit position, to make some profit, the last week of FKI is actually good time for you to try.
Okay, now the next question is a bit more technical. About the Ninja Trader software. So the question is asking, like, which connection type should the person choose? I don't really understand it.
Connection type. Okay. Ninja Trader actually not connecting to BNB now just yet. So you probably can't. I think they used to have one API by the pets, but they have decommissioning. I think last year or 2 years ago. So you may not find a Ninja Trader able to fire to trade local market. But as I said, it's a free tool for you to explore. But you may actually find there is a broker last time actually support, but now I think it's available in Singapore. So you may have to contact Singapore broker to give you connection back to Malaysia side.
So as Ninja Trader is a free tool. So now, do you
Yeah,
prefer trading on derivative or equity alone that can maximize return and minimize risk?
sorry again.
Do you prefer trading on derivative or equity alone? That means that can maximize your return, minimize the risk. I mean,
Okay.
do you prefer to only trade futures or only trade equity?
Honestly, I'm preferring to futures because of you can short selling a futures contract, and then to hold a stocks you need full margin, which not margin, that you need to pay the full amount, or you finance by your broker, which you have to charge the financial charges. But trading in futures, let's say a contract worth 90,000, I pay only 5,000 or 4,500 rather to control this 90,000 stocks worth of an index, but I don't have to pay the difference in terms of interest to my broker. So and then because of calendar spread, I can short selling, I can buy one and sell one to hedge. To me, as a futures trader, I feel like the futures trading is actually quite low risk, okay, compared to trading stock alone. Because trading stock, if it's wrong, you can't hedge, you just have to cut loss. But trading stock is good because you can look at fundamental. You always look at one direction, long side. Market is good, then stocks go up. Yeah, you still get a pretty decent result. But and then the market is quite big for equity market. Futures market is actually slightly niche because people are trading actually slightly not that many compared to stocks. But to me, since I'm trading futures for this many years, I've been finding probably it's just my own opinion. I find that future has got less risk compared to I'm trading equity. But this is actually provided I do what I do, like spread trading, reducing risk, hedging, and all this. So this gives me an edge which I can survive in any turbulent market. I can survive in bad market, good market, but I make some little money along the way. This is how I make my living. So if you ask me personal opinion, I would choose futures. That is why I ended in, because initially I'm trading stocks as well.
Okay, hands down, futures all the time for CC Yong. Okay, so the last one is that to give feedback to you is that your info@straitsindex.com has not responded to a person's request for your webinar recording, which was submitted like
really?
3 weeks ago. So yeah, you can get your staff to look into that. Yeah.
It could be actually rejected by our email server, so that happens all the time also.
Yeah. So
or you can actually contact us via phone. In case it's an email problem, then we may actually not receive the email. Or sometimes when we receive the email, we send it out. I have this experience that the other party rejected our email. So it's really like I advise you, if that's really the case, which shouldn't happen after 3 weeks, I'm sorry, but you can actually always make a call to us or send the WhatsApp message or SMS to our office number.
Okay, well, thank you so much, CC, for your sharing. Yeah. So, but today we have another speaker online who want to share with you about their trading platform. So, as I mentioned, this program is sponsored by Bursa Malaysia Derivative together with the CIMB. So, shall I introduce the next presenter, which is Li Xing. Now, Li Xing, I'm making you a presenter now.
Okay.
Yeah, can hear you.
Hi.
CC,
Yeah.
you are
Okay.
you can
Alright.
you can leave.
All right, no problem.
Already, but yeah, but just that don't click end webinar, click leave webinar. Okay.
Okay, sure, no problem.
All right. So, Li Xing, over to you. We are not seeing your screen yet.
Yeah.
Yeah.
Okay.
Is this your screen? Oh yeah, cool. Well, I'm seeing your screen now.
Can you see now?
Yeah, seeing your
All
webcam
right.
screen. You look excellent.
Okay. All right. Good evening. I'm leasing from Sambi Futures. I'm a dual license dealer for tourists dealing in futures and stock market. Today, I would like to introduce Sambi Futures to you about our company trading platform and some special promotions. Okay.
Yeah, we're now seeing
All right.
your slide.
Slide. Okay. Our first slide here today will give you a quick reference of what Sambi offer compared to the industry. Okay, the average brokerage offer in the market is roughly 15 to 20. But for those who attend the seminar today, we will offer cheaper rates, which is for FKLI, we offer 10 and 12 for overnights.
Wow,
For
that's
CPO, we
nice.
offer,
So for
for
attendees
CPO,
today, we
yeah.
have lucky treat, right?
And for CPO, we offer 7 intraday and 13 overnights. And CMB offer free trading platforms. We have web-based trading platforms, application-based trading platform, and also mobile trading platform. I'll show you the features and the interface of our platform later. And we also frequent through the client rewards campaigns and seminar. I'll cover more in a later slide. We also provide monthly fundamental CPO reports, which will be done by the research analysts who cover plantation sector. And let me show you the advantages of trading with the CMB. And we have branches nationwide. We give professional advice. We have complementary trading platforms, and we offer mobile tradings. We have reward campaigns every year, and you can find our research on our research reports on our websites. We are also the Bursa Awards winner, and we provide 24 hours dealing desk support. And we give competitive rates. As you can see, we have 10 branches in Malaysia. Okay, so now let me show you our trading platforms.
Excellent.
Okay, so all right, we have a web-based trading platform. This is hold on. This is our web-based trading platforms. We call it iTrade CMB. And let me introduce some basic features of our web-based trading platforms. We have function bars on top of trading platforms, and this function can actually add on the panel over here. All right, and we have the watch list. You can add the stock info here, okay, which contain all the pertaining information of the particular. This is the stock information. We can add stock info here, which contain all pertaining information of the particular counters together with the historical charts. And we have the stock trackers, and this one you can provide the transaction details of the particular counters together with the intraday charts. And we have the order books here, and you can add on an order books, which is display the status of all order you have placed within the market days. And this is the order history. These features allow you to retrieve back all the orders you have placed. And this is our derivatives portfolios. It contains the detail of your position holdings and the unrealized gain and loss. And we have the analysis charts. Okay, this is our analysis charts. All right. Okay, these analysis charts, you can add on some technical indicator here for you to do your technical analysis. To add on the indicators, this is all the indicator we have. Now let's move from our application-based system, which is we call iTrade Pro. This is iTrade Pro, and this trading platform has more advanced features compared to the web-based iTrade CMB. In this system, it is very customizable. You can personalize whichever the way you like.
you can create the interface that you prefer. This is my interface. And for the price code, this is a price code. You can put different market price code together in one screen. So you can also put different time frame of the charts on the screen. You see here is the charts that I put. Okay, you can just open that and view the charts over here. Right, this is the charts. Okay, so you can extend to the multiple screen also. If it has, you can connect to 4 to 5 screen and put a different image on your different screen. The charts and screen code is synchronized, which means you can select the price code, and the charts will show. All right, like for example, like this. This is what we call synchronized. When it clicks on one product, the chart will show you the products you want. Okay, so you see the menu bar over here, and this, which is on the left hand side. All this menu bar can be personalized. You can add or move the items that you want. So you can customize it to the layout that you want. All right, here, this is the way you customize it. All right, this one, or you can put it out over here. And this is our iTrade mobile apps. Okay, this is our iTrade mobile apps. By clicking the menu here, you will see the menu bar appears over here, so you can easily check your market price and key ins. You can cancel or revise your order when you're outside. So it's quite convenient for those who travel frequently during the market sessions. And so we have the reward campaign every year. All right, we have a reward campaign every year, and for our clients, all right, based on their accumulated brokerage throughout the years, the price we reward our clients, minimal from the Touch and Go to the Rolex watch. Okay, we also send the daily commentary of the FKLI and CPOs. Okay, by email. The commentary provides an overview of the daily actions in the market, and this report also provides an overview of the economy data being released, global market news, commodities, and market performance. And you can also find our economy updates and single stock research report prepared by our research team in the iTrade website. Okay. And the next, I would like to introduce our iTrade gateways. All right, this is our iTrade gateways, and it is a one-stop knowledge portal to give you a more complete trading experience. We will update our market outlooks video on a weekly basis. You can also check out the coming events and workshops that we will conduct. Register yourself through the iTrades. And you can also download our commentary over here. Okay. And at last, I would like to say for the participant of this webinar, we offer 6-month free iTrade Pros. If you're interested to open an account, please kindly contact us. Thank you for your days and have a good day.
Yeah, thank you, Lei Xing. And there's a question here, but if you really want to open an account, yeah, I have just put in Lei Xing's and Nancy's contact there. You can contact either one of them. So they will be there to help you. I just put in the number in the chat box, so you can click and save their contact in the chat box. But in the meantime, there's a question that asks, can I use other browser like Chrome to access your iTrade?
Yes, you can. You can use Google Chrome's and Internet Explorer and the Firefox.
Yeah, all is stable, huh? Okay.
Yeah, very stable.
If you have any question, you can ask Li Xing here. I can try to facilitate. Okay, so thank you so much to CMB for sponsoring our participants today with a free 6 months of iPro if you open an account with them. So for those of you who have not had an account yet with any futures broker, I would encourage you and urge you to sign an account with CMB because they are one of the best futures brokers in Malaysia. Okay, I think the division wins a lot of awards in the Bursa Excellence Award night. Yeah, so if you haven't opened an account, yeah, please feel free to contact them. You can contact them tonight, or maybe give them a text, and then they will follow up with you, or you can give them a call tomorrow as well. They are one of the friendly broker that we've managed to work with. All right, so is there any more question? If there's none, all right, so let me go to my slide. Okay, all right, so this is my slide, which is the last slide, which is going to tell you for our next webinar, we're going to talk about FCPO trading strategy, outright trading strategy, but it will be conducted in Chinese. So if you want to tune in to learn our future trading strategy, and if you're more familiar with the Chinese language, yeah, you can also click and register for this event. All right, so next event we're going to talk about FCPO 期货交易策略. Okay, I've already put the link in the chat box. All right, please click and register for this event. All right, with that, thank you very much, Li Xing, for coming online to share with us today what CIMB has to offer to our subscriber today, and thank you so much for your promotional gift for our subscribers today.
Hi, thank you, Shane.
Yeah, and thank you everybody for tuning in tonight. So have a wonderful rest of the day. Okay, bye bye.